We terminated one more 9-hour session in the markets today. We had Tesla Motors Q4 2015, and once again we predicted the move in Tesla Motors on the downside. This is according to an investment plan which I defined last year in 2014. I had the opportunity to describe that plan on video to share with you, namely to sell long positions within a range 260 to 285 and to reverse to the short side. And by doing so, defining also a target profit for this plan to be 35 million US dollars for hedge fund managers and investment banks. A few months later, you had confirmation that my vision it was extraordinarily accurate. But it was extraordinarily accurate not because we had today Tesla Motors at 204 after hours. It was extraordinarily accurate because I described that plan in advance of the price 285 to be the top in Tesla Motors, and that price proved then thereafter to be precisely the top. So that was the remarkable call that I made in Tesla Motors. With Tesla Motors earnings, we basically also terminate the earnings season here, where calls in GoPro, Facebook, Google, Twitter, Yelp, just to name a few, they were all discussed and they were all 100% accurate, Netflix and Amazon. Some of these calls, they were made public ahead of the announcement, as the case of Amazon, where we decided to disclose a long position, and not only a long position as well as an opportunity to win a Mercedes AMG, I remind you, GTS, the new model. And all those calls that we made thereafter, including Chipotle, a very important one, I believe that it proves that we continue to be the leader in this industry for the past 2 decades, to maintain the best track record in terms of historical basis. So I would like to congratulate those that decided to invest in Tesla Motors and all these stocks that I've been addressing here according to the plan that I described, very well defined the targets, very well defined the instructions, available on video on demand, but also discussed daily on live streaming for non-professionals and for professionals. Having said this, you are looking at one of the titles that we discussed during market hours today, an upgrade in Tesla Motors by Pacific Crest to a target price 316, which I consider absurd, and you had confirmation of it, I repeat again, after hours with the shares trading at 204. Having said this, we discussed also during market hours this game in Yelp. As you know, Yelp, it was other stock where I predicted a crash. I call it the top in 2014, the region $90 to $95, bailing out of long positions. The stock was overpriced, the stock was considered a bubble, and by saying that the stock had to collapse, had to crash, as well as the case of Pandora Media. In fact, explaining here that Yelp didn't have any competitive advantage whatsoever. And this, unlike Wall Street bullish projections, and defining here, describing to you the game in Yelp, making use of this important lesson given by Jim Cramer, that in 2015 and 2014, several times he repeated that Yahoo should have bought Yelp, or even Apple to buy Yelp at $75 per share, which obviously it is an insult to Apple management, and it was a trap to lure retail investors all over the world to buy shares of a company that didn't have any competitive advantage, and moreover, the company was going to miss earnings, as we announced in the blog of the company. So I consider that the earnings season, for obvious reasons, it was perfect. The game played in Amazon, it was extraordinary. The crash all the way down to $291 and then reversing to the long side. The game played in Netflix, the $472, where you have that call on the blog live, betting on the crash all the way down to 323. In fact, as we did already the previous year in 2014, since I upgraded that stock at 52.86 when it was considered a dog in Wall Street. And by having these trading strategies, these investment strategies very well defined in advance and shared with all of you, you had the time to prepare for to make a considerable profit in the markets without any risk whatsoever, having in mind the history. We have been shaping the history of these stocks since IPO, as it has been the case, for example, with Twitter, where I announced investment opportunity at $35 after betting again on the short side, the 56, the previous earnings announcement, all the way down to 45. So all the calls that were made here in the most important companies in the world, Apple including, became a 700 billion market cap company. All the calls discussed here, they were perfect, and I think that is a remarkable achievement. Not something that I was looking for, something that happened, something that has been happening for a long period of time. But as I've been saying, the most important is not to be always right, is to have this consistency, which is one of our competitive advantage, and that has been repeating year over year, and by teaching you the game played on each stock, and to disregard Wall Street games, but instead the most important, the ability to read the markets, and by doing so not to invest or to trade attached to beliefs. So I see you again tomorrow in another session, and we are happy to have you here. Thank you.